discussion will focus on Sharia compliant investing at Senfin Asset Management. So we will explore their risk return profile, investment universe, market outlook, and the growth potential of Sharia unit trust. So for this discussion, I have with me today Mr. 𝐒𝐲𝐿 𝐋𝐚𝐧𝐤𝐚, Director and CEO of Senfin Asset Management. Hi, Mr. 𝐒𝐲𝐿.
Hi.
So to start off with, could you explain how the Senfin Sharia Income Fund and the Senfin Sharia Balanced Fund differ in terms of risk profile and asset allocation, and how these differences translate into distinct return objectives for investors?
Right, yeah. So very simply, Bimasha, the Senfin Sharia Income Fund, as the name suggests, is an income fund.
Yeah.
So which means it invests in Sharia compliant fixed income instruments. The Senfin Sharia Balance Fund is an equity based fund. So that fund invests primarily in equity. So these are listed stocks on the Colombo Stock Exchange that are compliant with the whitelist. I know we'll probably go into that into a bit detail later, so I won't go into whitelist related matters right now. So the primary difference between the two is, instruments aside, the Sharia Income Fund is very low risk because it is similar to investing in a Mudharaba savings deposit or wakalas or any kind of Sharia fixed income instrument. Whereas the Senfin Sharia Balance Fund, as I mentioned earlier, is primarily into equity. So basically it comes along with the standard risks that you would expect from investing in conventional equity instruments. However, obviously there is an additional element of risk reduction that comes in, that come out of Sharia principles, which again we will go into, I think, in a little bit more detail later on. So that is broadly the main difference. So one is more fixed income, lower risk. One is more equity, medium risk. But obviously again the risk return difference. So the lower risk, which is the income fund, has relatively lower return, whereas the Sharia Balance Fund, because it's in equities, has the potential to do quite well.
Alright, and also can you explain the investment universe for both the funds, detailing the Sharia compliant equity whitelist and the approved fixed income instruments used in the Sharia Income and the Sharia Balanced Funds, and also if you could describe the processes that the fund managers follow to ensure all investments are fully Sharia compliant?
Right. So I'll go with the Sharia Income Fund first because that's a little bit easier. So we'll get that out of the way first. So when it comes to the Senfin Sharia Income Fund, it's actually quite simple. Yeah. Basically, there's available investments out there. So it would either be investments that are from a fully compliant Sharia institution such as Amana Bank, or it would be from the Sharia division from one of the more mainstream financial institutions. So as you would know, and as our viewers would know, many of the larger banks and financial institutions have their own Sharia divisions. So the deposits and the investments that they take in there are fully Sharia compliant. So for us, that makes the job a lot easier because they have already done the work in terms of being Sharia certified, Sharia compliant. They have their Sharia scholars. So all we really need to do is evaluate them on a very technical basis. So it comes down to the same way you would evaluate a normal mainstream institution. It would be looking at what their rating is, what their management is, what their income statements are like, and what the strength of their group is. So on the Sharia Income Fund, it's not very complicated, and it's not something that you need to on a very regular basis reevaluate. You'd only really do it if it's a new investment that you don't already have. Otherwise, it's just standard fund management. Now, the Sharia Balance Fund or Sharia equity instruments, that of course is a little bit more complex, and there's a little bit more that needs to be done. So the first thing that you do is you have your whitelist. So what the whitelist is the whitelist is basically the companies that have permissible income. Now what this means is basically there will be already a series of companies that will already be eliminated, that their primary business line is anyway not Sharia compliant. So the example for that would be companies that are in liquor, companies that get a significant component of their income from liquor, cigarettes, companies that are in gambling, adult entertainment, companies that deal, and obviously companies that are primarily income or interest based. such as banks and financial institutions, as well as insurance companies that are not takaful. So takaful is the Sharia compliant insurance. So companies, so mainline insurance companies, mainline non-banking financial institutions, and mainline banks are all automatically eliminated. So that's your first layer. That's the first layer of companies that automatically are eliminated. The second layer is based on, it's actually a technical analysis. So it's based on formulas that are used. I won't go into detail in terms of the formulas because it's very technical, but there is a series of formulas which are very linked to the component of the permissible companies, because not all companies will be 100% permissible. So to make this very simple, you might have a company whose primary business operations are permissible. They are Sharia compliant or halal. However, they may have, say for example, they may have investments in a fixed deposit, a conventional fixed deposit, in which case the interest that they derive from that, now that income also contributes to the income of the company. So now the income, that interest income is not Sharia compliant. So then therefore that component has to be removed from the income that that company has made, and thereby from the profit that we derive from investing in that company. So the process that how this is done is, it's something called purification. So purification is basically at the end of the accounting period, you would look at the total profit that you have made from the Sharia balance fund, and then what you would essentially do is, on an individual basis from every company, identify the component of their income that is impermissible, again based on very clearly defined methodology, not something that we've come up with. This is based off international methodologies. And then what you do is you identify from all of these companies, this is the amount of income that was impermissible, and this has to be stripped out from the full income at the end of the period. Now that component, which was the impermissible income, that has to be distributed to an approved charity. Now these are the two things. So now this is obviously from the fund manager's side. So now to ensure that all of the work that has been done and all the investments and the purification, which is the stripping out of the impermissible income, to ensure that all of that has been done the right way, similar to how you would get an auditor to audit the accounts of the company, in this case you would get a Sharia scholar to audit the Sharia aspect of the operations of the unit trust. Now these Sharia scholars have to be approved by the SEC. So the Securities and Exchange Commission of Sri Lanka, I think in 2024, towards the latter part of 2024, issued a directive, and they identified 6 scholars and said, based on our understanding of the market and all of that, these are the 6 scholars who we approve to sign off on the accounts and the operations of any Sharia compliant unit trust. So we have to essentially ensure that any one of the scholars that we get to sign off on the accounts and the performance and the operations is one of those 6 scholars. That same thing is applied to the whitelist as well. So we need to follow a published whitelist. We can't use our own internal whitelist. You can't use our own imagined whitelist. There needs to be a published whitelist. As of right now, there are a couple of issues in the market in terms of clear guidelines in terms of whitelists. However, the SEC has taken steps to resolve that matter, and that's not going to be an issue specifically over in the long run, or in the short run rather. So I hope that answered the question.
Yes, thanks. So, and also given that there is currently only one listed sukuk instrument in Sri Lanka, what is the market expectation for the development of the sukuk market, and how might this impact Sharia compliant fixed income opportunities for the Senfin Sharia Income Fund and also for the balance fund?
Right. So again, this is primarily to do with the Senfin Sharia Income Fund. So the thing about sukuks is, sukuks are generally the best investment from the fixed income side of things. Yes. Because you have things like mudaraba deposits, you have things like wakala agreements, you have things like corporate mudaraba savings, things like musharaka are much rarer in Sri Lanka, and because those are a little more complex, I think, to really implement for the market, because despite Islamic banking being in Sri Lanka for a very long time, it's still weirdly enough in a very nascent stage, and it hasn't gone mainstream yet, though it has seen significant growth. So coming back to the question on sukuks, the real issue that we have from sukuk, in my personal view, I mean, there are obviously smaller issues in terms of the companies and potential markups. Now, just to digress, the sukuk that was launched had very low retail participation. It was mainly from corporate investors who basically knew what they were looking for, mainly companies like the Senfin Sharia Income Fund that had no choice but to invest in a Sharia compliant instrument. So retail participation from was very, very low for that sukuk. So that is something that really needs to come in. So you're going to have to, there's a lot of work to do to develop that. But for me, my own personal view is you need to, for a sukuk to really broad base and to really take off, in my view, you need two things to happen, right? The easier thing, obviously, is to have a lot more building of knowledge and understanding. So there needs to be a lot of education, a lot of awareness needs to be made on what a sukuk is. But then before you go into what a sukuk is, you actually need to talk about Islamic banking itself. And that needs to be broad-based, that needs to be taken out not just to, say, the Muslim community, but outside, because there are a lot of advantages of Sharia principles in investing that aren't at all even, you could say, relevant to whether you are a Muslim or not. They just make sense based, and for that you need to really take that out there. So awareness is severely lacking. So that is something that really needs to be built, and there are a lot of parties and individuals and groups that are really working hard on that to get that done. But I think that needs to be supported from the regulator and from the government. So that is something that really needs to come in. The second, even more important thing, which is again related to support from the government, is something called a sovereign sukuk. So sovereign sukuk is basically, so a sukuk is basically a bond, right? A non-interest based bond, which is backed by some kind of an asset. So basically what you really need is you need a government to issue a sukuk. Because what happens is the moment the government issues a sukuk, you are going to get instantly a government yield curve. Right now, any sukuks that a company does, it's their own internal sukuk. So whatever the yield, whatever is based on what they, the profit sharing amount that they can put. Now the problem is, for any bond, you need to have a yield curve. You need to have some benchmark to compare against. So without a sovereign sukuk, you do not have a benchmark. So without a benchmark, identifying what the risk premium between this sukuk and the government sukuk makes it very difficult. So until you have a yield curve created based off a government sukuk, that is also going to be another hurdle. Now, that is easier said than done. That just because I say this, that doesn't mean tomorrow the government can be like, okay, let's have a sukuk. So there's a lot of things that would need to be done in place, but that is something that needs to be worked towards. So I think the awareness building and working towards a government sukuk are two things that would need to work together towards developing that. So that is really where the advantage is in. Once you have that going, it makes a lot of sense for the two funds, coming to the second half of your question, because a sukuk is one of the best kinds of instruments, because you get liquidity, you get a better return. So if not, you're constrained to a very limited pool of investments, which can, and they're very, very short term if you're looking at fixed income side. So whereas a sukuk, it can be more than a year. So that brings in another huge advantage, which brings in scalability. So that is what I would look at from based on the question you asked.
Yeah. And also, so given that the Sharia compliant unit trusts remain a niche segment within Sri Lanka's unit trust industry, what steps do you believe the industry could take in expanding the Sharia unit trust?
So as of right now, I think there are only 3 Sharia compliant fixed income funds and only 1 Sharia equity fund, which is the Senfin Sharia Balance Fund. And it's been like that for a very long time. There were 2 funds previously, but due to low take-up, those funds are actually liquidated. So as of right now, you have only 3 Sharia compliant or 4 Sharia compliant unit trusts in the country, 3 on the fixed income space and 1 on the equity space. Now the problem here is the unit trust industry itself in Sri Lanka is quite small. It's seen massive growth. You've seen huge growth over the last few years. We passed 630 odd billion last year. It's come off a little bit this year, but you're still looking at, pushing 600 billion right now. So the industry is quite large. But still, when you compare that versus the overall banking assets, it's very small. So when you consider that the Sharia compliant subset of the overall unit trust, that's even smaller. So if you are really going to look at it, first you need to take the broader unit trust industry forward, and then you need to take this with it. So now what would really need to be done is, again, it comes down to the same thing. It comes down to awareness both in terms of the product, unit trusts, and then awareness in terms of the sub-product, which is Sharia compliant unit trust. So in my view, it comes down to nothing more than awareness, nothing more than road shows, awareness, government mandated awareness sessions and that kind of thing. That's what you would need to do.
And as for my final question for you, what is your outlook for equity and fixed income markets in the current environment in general? And also, how do you expect these trends to translate into returns for the Senfin Sharia Income Fund and Senfin Sharia Balance Fund?
So basically, again, let me start with the Senfin Sharia Income Fund first, or the fixed income environment, because that's a lot easier. So right now we are expecting interest rates to remain at the current levels. I mean, obviously, there is upward pressure on interest rates, and while we feel like interest rates will creep upward, we're not going to see significant increases in interest rates. So interest rates will remain, I think, broadly where they are, if not move up a little bit, but nothing major, nothing enough to cause a shift from alternative sources of investment. So in terms of the Senfin Sharia Income Fund, whilst returns will increase compared to what the returns have been right now, again, returns will be better than similar liquidity direct investments in Sharia compliant instruments such as Wakala agreements and Mudraba deposits and corporate Mudraba savings, and even to some degree Sukuk. So we have one Sukuk which we have invested in. There are a couple of more Sukuks that are supposed to come in this year, which we would probably invest in as well. So those should come in at the profit rate should be better than the rates that we saw last year. So all of these factors should increase the yield of the fund as well. But again, that would still be in upper single digits, in about the upper single digit range. It won't go probably more than that. And if interest rates, first of all, on the mainstream, if interest rates go up very high, you have other issues. So whether it's mainstream interest rates or the profit sharing rates on the Sharia compliance side, I don't foresee any significant upward movement, but definitely return yields will increase. In terms of the Sharia Balance Fund, I'll just talk about it from the perspective of equity itself, because the Sharia screening methodology is just basically what it does is you invest in better companies, so to speak, ethical investing, if I were to ethical and ESG related instruments. So if I were to talk about it overall from equity, you might have noticed right now the market is very volatile. You're not seeing significant upswing or downswing, but there's a lot of volatility. So there are a couple of reasons for that, which I'm not going to go into too much of detail. But broader outlook for equity markets. So in the next 3 months we may not see massive growth, but the broad outlook for equity is still positive. Given that the fixed income rates are expected to be low, equity still remains as a very good choice. However, cautious equity investing. So overall, we are expecting equity to continue moving upward. You're not going to see the kind of returns you saw in 2025 and 2024. That's not going to repeat. Those were very special circumstances. There was a lot of catching up to do. There was a lot of the market had a lot of catching up. Really, there was a lot of catching up that really needed to be done. So while this year you're not going to see that kind of return, you are still going to see a better return than any other instrument in the capital markets. Earnings are expected to be good. We've seen some earnings coming out, and by and large earnings are going to be good. So overall equity is still expected to be positive. Sri Lanka is also one of the relatively undervalued markets compared to the sector or the region. So that is also, I mean, wouldn't put too much stock in that, saying that okay, our PER is much lower than everyone else, so because of that it has to go up. So while I'm not going to say you are going to see significant growth, overall if you have a decent investment in equities and you have a good understanding of how it works, and a good, more than anything, a decent holding period. So you can't look at equity as a 3 or 6 month instrument. You need to have at least a 1 to 2 year minimum, and even that's lower. And normally equity is a longer period. But short of significant external shocks, like global tensions worsening into actual war, God forbid, or anything like that, or security threats within the country, or again, God forbid, anything like that, overall the country is on a good path. We've got a lot of things right. There's a lot more to be done, but I would say overall we're looking at a lot of the positives outweigh the negatives in terms of where we are going as a country and an economy, which in turn will drill down to equity, which in turn will obviously drill down to equity funds, be they Sharia or not. So that's basically what I would look at. I would encourage people to look at investing in, I'm not saying invest in the Sharia balance fund, but looking at investing in equity as well, but cautiously, and not, watch the market, make proper decisions, which is where a unit trust comes in. So if you're not someone who understands equity and you can't manage, investing directly in stocks, that's where the Sharia balance fund comes in, because that's a professionally managed unit trust. So you get all the advantages of having, liquidity, of having professional fund managers, research-backed investments, all of those things. Our trustee is at the National Bank, so you get all of that. So if you are someone who wants to get into equity, wants to look at getting the benefits of equity, but you don't really know how to go directly into equity, then that's where a unit trust would really come in. So that's pretty much what I would advise and recommend to anyone viewing.
Thank you very much, Mr. Jeevan, for taking your time to join us today in the conversation, and hope this was useful for the viewers who are considering investing in Sharia compliant unit trusts. And please don't hesitate to get to us to contact us on further details. Thank you.